Good evening, everyone. Thanks for joining in. It's my great pleasure with my friend Prince to host Samir. Samir Arora is a prominent figure in the world of finance and fund management, known for his expertise and success in the investment world. Samir holds an exceptional educational background that has helped shape his career. He is graduate from IIT Delhi in mechanical engineering. Further, Samir went to IIM Calcutta between 1983 to 1985. He was gold medalist from his batch. He later got his master degree in finance from the Wharton School. As the founder and fund manager of Helios Capital, Samir has established himself as a highly regarded investor and has been praised for his fund managing pedigree. Under Samir's leadership, Helios Capital has gained a reputation for its discipline and research-driven approach to investing. Thank you so much, Samir, for accepting our
Thank,
request. Because
thank you very much.
yeah, Samir, you can see the subject of today's space is embracing the path and navigating the market with Samir Arora. So we would like to have an introductory comment from you about the market as such currently, and what is your outlook about the market, especially Indian market for next 6 to 12 months.
Okay, so big picture is that I believe that the Indian market is in a good position, and if I have to give only one reason for it, that one reason from all angles is China plus one. So whether we look at it from the portfolio investors, basically FII investors, or we look at it from FDI guys or effectively supply chain guys, basically, or even from a geopolitics point of view, the world is extremely frustrated with China. And the beneficiary of that, if not 100%, but to a large extent, will be India. So if you look at big picture, the Indian market returns, if you look at it last, say, 5, 7 years, or 15 years, or 20, 25 years, broadly they turn up to be 13 to 15% per annum in rupee terms. That is at the index level. And there is a logic to that. I mean, that number is not just the fact that historically it is that number, and therefore, I think that similar numbers will come in the future. But even in the United States, for the last 25 years, the return in rupee terms is around 11.5, 12% per annum. So even a well-developed, well-penetrated with whatever everything in the market has given around 11, 12% return, which we can justify from a number of angles. First, you could say GDP in nominal terms growing like that in that range, or you could say that the equity risk premium applied on top of the fixed return or a government bond return, add 5 6% to that, also leads you to 12, 13, 14%, not 14 maybe, but 12ish%. And also, if you see the corporate earnings for most of the companies, leave out the extremes like these Tata Steels and Tata Motor kind of companies, which either make a few billion or lose a few billion. But if you look at most of the companies in financials, in IT in general, and in consumer broadly, they will grow in the mid-teen range. So if we look at it like that, the best estimate going forward for us, not necessarily for 6, 12 months, which is, can be influenced by many angles. But if you just set a slightly longer period, it will be in this range. But even in this range, if you see, say, for us, these cycles last 7, 8 years, in which, let's say, over the whole cycle, you are making 13, 14% return per annum. But in this 7, 8 year cycle, there is one year which is extremely bad. That year, when it is bad, is so bad that it normally takes away the returns of the previous year and sometimes even of the year before. So that basically means that in the good years, which let us say is 4 or 5 out of 7, the returns have to be higher than 13, 14% for the returns over the 7 years to be 13, 14%. And I think that will happen from now for next 2, 3 years, you'll make more than 13, 14% return per annum.
Samir, so basically, if I listen to you and many of your interviews, you generally put your investment into financials and technology and consumers, right? So,
Correct.
and you have been
Correct.
very vocal for last 1 year. You were correct also that you made your IT allocation zero, and you've been many times spoken about it, right? So, do
Correct.
you find that with the lots of correction in the ITs, especially the bigger names, that they're space is becoming little attractive now, or you have
No,
any other?
little attractive. No, little attractive it is, but I will not buy it so easily. My big picture logic is that IT, even if it does a little better, maybe not now, but say after 2, 3 months, because I'll tell you the in between, it is unlikely to outperform the rest of my market. So I only will feel bad if IT massively outperforms the rest of the market.
Yeah.
And I think that is unlikely in this situation right now. So let us do one or two of my theories in life. So my first theory in life is that a company or companies that have done well for so my theory, which I just call it momentum or fundamentals, is that a company continues to do well till it does badly. And the company that is doing badly continues to do badly till it does well. So let's look at an example like Infosys, which for say whatever 10, 12, whatever number of quarters was doing well and beating the estimates and everything. And then it comes to January of this year, on which they raise the estimate for the full year, effectively raising the estimate for the last quarter. And now came April. Now you tell that after 3 years or whatever, 2.5, 3 years of doing very well, how much head they would have banged to try and not disappoint. Because less than 70 days ago, they had raised the guidance.
Yeah,
And
guidance.
so in April, they would have tried whatever they could have tried to not blow up 2, 3 years of momentum, but they had to do it. I find it extremely unlikely that suddenly 2 months later they say everything is good again.
True.
So we don't believe that will happen big picture. In a small picture, if you see, because I also said one more thing, because we have a US fund and we are very heavily into US tech.
Take.
And normally all my life, we would say that if NASDAQ is doing well, that means Indian IT is doing well in some,
Yeah.
big picture context.
Yeah.
This time I was in a sense right that I distinguish the two. And the reason for that is that if you see not now when these AI companies are going up, Nvidia and all, and Tesla also being counted as an AI play, but say 2 months ago, 3 months ago, the US tech was going up because the US tech said we are cutting costs, we are firing employees, whether it was Google or Amazon or Microsoft or Meta, particularly Meta. So there the companies were being rewarded for saying we don't want to do extra projects. Don't want to do these big picture concepts like Meta and Google saying, I will do this and that. They said we are cutting those down. So it was a
Yeah.
very different game from the Indian guys who are not being rewarded for that. For India, it is to be rewarded for growth. But you look at the various constituents of US, even Amazon. Today also there is a news that cloud is slowing down, this, that, whatever. Plus there is this big picture overhang on whether this AI will influence or impact 10% or 20% or 30% of this business. So all my thing is I'm very relaxed only on the big picture basis that it may not do badly, but it is unlikely to pain me, so I will not change right now.
Yeah. So Samir, there are two theories, like as you said about the AI. So there are one segment is saying that because most of the company going to adopt the AI
We'll
now,
have to
they will.
learn. They'll have to learn about it. I agree with that. So
Yeah.
the one logic is that I mean not US companies will have to figure out how to use this,
Yes.
and therefore they will that will create more projects for say the IT companies. So my thinking on that is that if it comes to that, effectively you are saying that these companies will be helping the customers to replace them, I mean to replace these own company. Basically you will help some client to say hello, in future you can use this AI like this, so you won't need me as much. So if it becomes clear that that is the case, and you are getting 1 year of additional business, how much valuation will you cut for that?
Yeah.
That you are effectively assisting the client to reduce dependence on you. But there is a simpler thing. Simpler thing is that if you look at the average multiples of these companies in 2019, pre-COVID, and you look at them now, and you look at the growth in earnings for those, in revenues for those 3 years, let's say 17, 18, 19, and you don't look at the past now, but at the guidance or current estimates of the market, you are at least at a 20 to 25% premium on valuations right now. And we have seen that in every subsector, whenever in any sector where the companies had extra growth because of changes of COVID, whether it was online sales, Netflix subscriptions, anything, in every area, even home goods, work from home, anything, all of them basically you didn't start, sorry, the level was not raised. It was effectively a borrowing from the future, you can say. So in a 5 7 year period, you are getting exactly the growth which you should have imagined pre-COVID. It's just that if it happened in the first 3 years and the pent up, in this case we don't call it demand, but whatever you want to call it, pent up spending, has got or will get neutralized. But forget about me. You look at all the US companies, you look at CrowdStrike, Snowflake, EPAM, all of them are saying there is some problem, but we refuse to say because that is how our system works.
Well articulated, Samir. Just want to stretch one more argument. What I
Yeah,
heard that some of the people are saying, that if you remember 2019 and after that COVID came and the whole re-rating happened in the IT sectors, as you said,
correct,
at least 25%. That time they were trading at 100%, maybe valuations.
correct,
So
correct,
the whole narrative and the storytelling was that because of the COVID, people realized they have to go very faster cloud adoption,
correct,
and
correct,
therefore
correct.
all those companies will be huge demand. Now, if you look at the global data, I don't know how much is correct. Some of the fund managers saying that the cloud adoption is not even done at 1/3. So there are 2/3 of cloud adoption is still pending. Therefore, the demand not going to be slow down for the IT companies only
So
because
nobody knows, but just 1 month ago, Infosys has guided 4%. 1 month ago.
yeah. So but
So
the
then what else
argument
can
here
I say?
is yeah.
Not yesterday, but the day before yesterday, this EPAM says that I am cutting to negative.
Okay.
So the point is, why should I conclude they are saying it? By the
Okay.
way, for the first time since 2000, you are not honoring the guy who you've hired from campus.
Yes. Yes.
So what I'm saying is, why do we have to analyze? They are
Analyze.
telling you.
Got it. Got it.
Wipro gives billions of dollars donation, but to their employees they say potential. I mean, actually they are employees or potential. I don't know because you've gone on campus and hired them, but now you are saying sorry, you have to give new exams, otherwise take a lower salary.
But at the same time,
Who
Wipro
does
is
all
buying
these
back
things?
too.
Who does all these things except if you are? But forget about that. The point is that in every area you can see, I can give another story if I want to be bearish. I'm not bearish, I just don't have it now and I don't feel like changing. But I could say that there were these not billions, I don't know, but hundreds of millions being spent on, or maybe billions being spent by these new startup kind of guys, or the
Yeah.
new companies being set up, which obviously all needed to spend on technology because
Yes.
they were all tech plays, and those tech players are not being funded. So how much collective demand have they has been destroyed by all these companies uh, basically not being seeded, funded, or whatever is the word? There's no answer to this. All I'm saying is it is unlikely to pain me, and right now that is my first this thing. When we are separately saying that India is doing well and that financials are in a strong position and this and that, and why should I deliberately go and buy more of the companies which are connected to mostly US, let's say, when we are saying separately that now because of US interest rates, because of QE being stopped, etc., and because of India doing well after so many years of these different reforms which set a base, but the overall economy was not good, and now it is good. I have only a fixed 100 rupees.
Yes. Got it, Samir. Samir, regarding the financial sectors, I know that you generally don't buy PSUs, but you bought SBI, right? And you made good gain out of it.
I have another one now. I bought PNB Housing, which I think is not called a PSU, but whatever you want to call it.
Yeah. So, I mean, what's your view on the sector? I mean, this rallied much in last couple of years. Do you see that this rally is going to be continue, or you seeing that, I mean, what's your view on that
So
sector?
here the view is that right now it is continuing, we believe, but we will all have to see that one day it could have a bad ending, maybe 2 3 years down the line when too much has been lent out to the Indian consumer. But then on the other hand, although these issues came up, we were recently studied. You can type on Google and see there are papers on this that in Korea in 2002 there was a massive collapse of credit card companies and all these consumer companies, I mean finance companies, because of in the previous whatever 2 3 years there had been massive lending. Now right now we know that every fellow says that every they're all growing at 30 40 25 whatever percent. So one day we have to worry about it. But right now it looks that these things happen when there are job losses or salary cuts and all that, and we are not having it or should have it. So right now we will run with it for some time. Also, if you see in terms of pure performance, ICICI Bank and State Bank and HDFC Bank, all of which we own, haven't really done anything for 6 9 months. So they don't look. They all did well. I mean, not HDFC Bank hasn't done for 1 2 3 years, but ICICI Bank and State Bank did well from whatever 20 middle to like middle of last year, you can say. So it doesn't look that they're also caught in this. The other thing is that the FII flows um, were not there for say 1 1.5 years, and now if the FIIs come and like they put whatever 4 5 billion this month, over time they have to buy 30% of 35% in financials. So the new FII buying will absorb if some people feel, which sometimes when these stocks don't do well, even we don't know exactly how to justify it, but we feel, oh, maybe it's overall, maybe everybody knows the story of ICICI Bank. But for 25 years I have owned HDFC Bank, and at every point everybody knew the story, and still the stock has gone up whatever, I don't know, some thousand times or
Yeah.
whatever. But at every point it was known to everybody. It's not that only I knew that maybe the first 1 or 2 years many didn't know. But broadly, a well known story doesn't make it a. For example, everybody knows that Google, for many years and even now, is the search dominant and this and biggest gateway into the internet, and still the stock went up every year. So just because everybody knew it doesn't mean that you discounted it. You can see it in all the obvious US stocks which everybody knows about, and still they do well. Similarly, in India, for example, in 2013 December, HDFC Bank reached foreign ownership limit and therefore was removed from MSCI. So
Yes.
at least we can say that in 2013 December, everybody knew that this is a good bank. Still, it has outperformed from that day.
Yes, yes. But Samir, a curious case of HDFC Bank, I personally also hold that stock, and it's also my one of the largest allocations. And what happened that during 2020, when Mr. Puri left, the narrative came, there is a management shift, maybe bank will not
Correct, correct,
perform.
correct,
Then
correct,
second
correct.
thing came that okay, the
Technology.
technology stack is not good.
Correct,
Now
correct,
the
correct, correct.
narrative for last 1.5 years,
Merger,
The FI is selling,
merger,
therefore they are not
merger
rallying.
issue.
But
Correct.
FI started coming back, but still you see that HDFC Bank, not rallying much. I mean, and if the earning growth is very strong, 18 19%.
It
They're
will
still.
happen. You see, the thing is, I see it in a different way. First is, of course, this FII, what MSCI did is basically blatantly wrong. If
Wrong.
you are an index creator, the whole purpose of index is its formula. You can't say, "Nay, let me think about this, whether I should do it or not." No, okay, I'm not doing it. By the way, may I spend 2 minutes on the
Yeah, yeah,
100% idiocy of MSCI? So let me explain.
yeah.
If a company has no foreign ownership issue, which means it can be 100% foreign, I mean, it can be 100% owned by whoever, let's say a US company in US, right? Now, when suppose 98% of that is owned by 23 institutions, or not 20, I mean by institutions,
Yes.
MSCI does not say that how will new people buy it, because it is already currently owned by institutions, therefore I should reduce the weight. Now in this case what has happened is, in India case or maybe other countries, that now the foreign ownership is 74%. So if there is 100 million market cap, theoretically also only 74 million can be bought by foreigners,
Yes.
which means its weight will be 0.74 into the whatever is the market cap at that time. Now,
Exactly.
how does it matter who owns the 74, or whether 74 is fully owned or 72 is owned?
Exactly.
When the limit is 100, you don't say that the room for buying is only 5% if it is 95% held by institutions. But when the limit is 74, they start worrying about room. They should say the weight is 0.74 into whatever. And if for other stock the limit is 49, then 0.49 into the market cap. That is the amount you can buy. And therefore, whether somebody owns it or not, you go and buy it from that guy. Just like when there is no limit,
Yes.
you are supposed to buy from the other institutions.
Yes.
Nobody's tracking whether institutions are owning or retail is owning here.
Yes.
I don't know. Anyway, complete stupidity. But the point is that uh, uh, because it was expected that it will be included at the full weight, since the room is currently very high, there was at least $3 billion or $2 billion of buying that was done to front run that.
Yes.
And that, again, will take or is taking these time. So this will take another 3 6 months, I guess. But if you are 10% of the index, that means effectively every new mutual fund raising money in India, 10% they have to buy HDFC Group.
Exactly. Yes.
So
I
it
mean,
can't be so bad.
yeah, I got it. But Samir, what's your take on the merger? Because there are two types of stories, that it will become so big that it will be difficult to get a 18-20% growth. And on the other contrary, people are saying that merger will help each other's, creating some synergy. What side of the
So beyond a point, I agree with you that beyond a point you cannot grow at those rates because the size is a drag in life. But now that it has not done well for 2 3 years, some catching up is required or will be done according to me. So I have held it continuously since 95. After 2 3 years I will also look at whether it can continue or not. Right now the issue is not related so much to that as it is related to FII and merger and all. And the merger and all, I think, is okay. Nothing wrong with the merger, plus minus a few months. Plus, these things take time, but that time it has taken. And we know that if the underlying growth is there and the stock has not gone up for 2 years, or actually maybe even 3 years, then these things, the valuations become normal. And normal means not as high as if in hindsight they were at that time. So, Abhi, we feel okay with it. It's actually, I mean, in the sense we have three stocks nearly identical weight. So sometimes this is higher, sometimes the other two are higher. All the three banks are the top three holdings of the fund.
Yeah, so Samir, I understand about the banking, and I think the NBFC sectors probably will do well because interest rate is also picking out. So, what's your view on the NBFC now? You are increasing your allocations on that sector, or you are just
No,
holding?
we have. No, we have quite a few of these NBFCs also. Basically, we like the financial sector, and because we don't have IT, that
Yeah.
released, and even pharma we don't have. So these released whatever 15 18%, which has gone into financials and consumer, and a few of these cannot be categorized stocks or defense stocks or like this, some of the other stocks. But otherwise, we had room and have room to buy more of financials and consumer, primarily because one of the sectors we have blown off right now.
Yes. Samir, I just wanted to understand because we are talking about NBFCs. I remember that you made some 70x in the Bajaj Finance, right? And
No,
when
I
you
didn't make 70x. I made 45x.
45x. Okay, so you told about that, you generally give 1.5-2% kind of allocation to some of the emerging companies, and then so you keep on booking profit to ensure that you are still
Yeah,
maintaining
yeah,
3-4%. Okay.
yeah. So we never make, like when we say we made 45x, doesn't mean that we made 45x on the starting position. It
Okay.
means you made 45x on the starting position and what you sold in the end, but
Okay.
in between also you had sold. So we are not talking cumulative. We are
Cumulative.
talking last sale to first purchase or
Percentage.
initial purchase. The reason for that is because my whole NAV in 25 years is up more than 340x in
Okay.
rupees. But the point is, we are a fund. Fund means not every day, but every month people are coming and going. If you start a fund with, say, 10 stocks of 10% each, which is a non starter according to me, and it is designed to fail in a fund concept unless you have completely locked in money, which, maybe one fund may have or something. But broadly speaking, if you have, say, 15 stocks also, let's say with 8%, 7% type number, or one stock being 10%, and then that obviously some of those stocks should do well and will do well, and the weightage of that becomes 15%, let's say.
Yes.
Now, a new investor coming into the fund is going to start with a 15% weight in a stock.
Yes.
That is an impossible thing to be sold or even to take that risk for the new guy, because you can't say after 1 month to the new guy that, or you come on TV and say, we have made so much money on this stock, we have made 23 times, let's say, just whatever. And the new guy says, bloody, since I came, it is down, say, for 40%, 30%.
Got it.
So you can't have it like that. It should be at all times that the new and the old should feel comfortable. Now, the thing is, somebody can say, oh, but you book profits for the old guy to make it convenient for the new guy, let's say, or something like that, right? Or to make it. But the point is that you don't know. Do you think that anybody in Bajaj Finance knew in 2011 when we bought it that this company is supposed to become $50 billion company? Do you think they knew it? Do you think Rajiv Jain knew it? Nobody knew it.
Nobody knew.
Nobody knows it because these things happen. A better example is we bought Varun Beverage in 2019 and it has gone up, I think, 5x or 6x. Do you think they knew that in 2022 they will have a drink called Sting, and that Sting will be suddenly a big hit because Indians will like to have high sugar or whatever? You think anybody, you think Coca Cola knew that Pepsi is thinking of this drink? So how will I know? The point is, you buy all these stocks, and some of them will do well, and then some of them, while doing well, after that will suddenly do very badly also. So every stock will have 2, 3, 4 year of good run, and then very few of them will be able to do well for like 10s and 20 years, which maybe some of these banks have done and some of these consumer guys have done. Otherwise, hundreds of stocks have done well over 1 to 3 year period. And that is the only period you can analyze. For example, not Ultra, sorry, कौन सी थी वो real estate company हमारी दिल्ली वाली?
Yes,
Unitech,
sorry.
Unitech, Unitech,
Unitech.
Unitech.
Yeah. Yeah.
So Unitech started from zero, went up, I think, 500 times in 2003 to 7, and then went to zero.
Yeah.
Now, in between, we bought it in 2005 and we sold it in 6, and we made 5 times. Okay. So, out of that 500x move in the stock, we got 5x out of it. But today, if you look at the winners of the last, say, 20 years, 30 years, there is no Unitech. But
Yeah.
in between, it was a 500x. There was another stock like that where we made some 5, 6 times, which was Aban Lloyd. Aban Lloyd in 2.5 years went up 100x. That
Mm.
is from 5 to, I think, 7 or 8. Now, when we bought it, we didn't know that it will do well now and then go to zero. You are buying it thinking that for the next 2, 3 years it's okay, and then we'll see.
Okay.
So at one point, we ourselves were making 8, 9 times on the stock, but then it fell. And we then sold it off maybe when it was already down 30, 40%. So we made 5 times or 4 times or something. Point being, it is not that, first of all, very few stocks do well for very long periods. That is why they are called HDFC Bank and Kotak Bank and
Yeah.
all. Otherwise, there are at least 10 other banks which I have also bought at various times. Centurion Bank, Bank of Punjab, Times Bank, I think I didn't buy, but many of these private banks, Global Trust Bank, even Yes Bank initially. So many of these you buy, and then some do really well, but you don't know that on day one that which of these fellows will graduate. There was absolutely zero logic that why Bajaj Finance will go up on that day. Why there was nothing? What there's a pretty auto guy trying to do finance, and one brother has got the financial company. How are you supposed to say I will put everything into it? So that is our model. That so many companies are doing well for 2 3 years. You buy it for 2 3 years. If it continues to do well, you keep it. That is not my model. That is everybody's model. If you look at Rakesh Jhunjhunwala, he would have bought more than 150 companies, and then three worked or five worked really well, so he kept them. We can't keep them to that extent because we are a fund. But it's the same logic. Warren Buffett, how many stocks he would have bought in his life? Not less than 2,000 stocks, according to me.
Sure. Yes.
And in the end, he's kept 10 stocks.
But Samir, just one puzzle I want to you to clarify, because I personally also struggle with it. So, for example, let's say Titan as an example, right? Titan is a well-known name, and their story is intact right now. Even you look at Titan, maybe 10,000x, 1,000x in the last 30 40 years. But if you look from 2016, I remember when I first time purchased, but still it's got 9x, right? So now every time you look at the valuations of those companies, right, they basically looks very expensive. And even you
Correct.
take some, but if you don't buy them and own them and keep it in your portfolio, you regret, because it's very looks like very safe companies. Even the valuation got straight, still if you want to beat the
No,
index.
I disagree. Although
Okay.
I own Titan, but I disagree because you are only seeing them in hindsight. You look at all the companies which in 2010 would have had 40, 50 Ps or 60 Ps and looked okay. I
Okay.
can give you a specific example. So I asked Motilal Oswal, the broker, not the fund manager, the
Okay.
brokerage arm, that give me oldest consumer reports you can send, whatever reports you wrote in 90s or whatever. So one of these sales guys, he sent me in consumer sector. So he sent me two reports written in the same quarter, which was 99 Jan or something, and 99 maybe March, April, on Nestle and Levers.
Yes.
And both of them, these guys had a buy. So I saw the whatever numbers. By the way, this is there on my one of my webinars also. This thing, that's why I remember these. So there you can see the 99 numbers for Nestle, or the projections at that time, and whatever were the numbers for that year and 1 or 2 years before, and similarly for Levers, and written by the same analyst also
Okay.
working for Motilal. There is just no chance that if you had to choose one of those two stocks in that day or at that time, you would have chosen Nestle over Levers. And over the next 10 and 20 years, which also I show in that slide, Nestle has beaten the market. I think market is up some 10, 12 times or something, and Nestle is up 50, 60 times from that time, and Levers is up less than index. So what I'm saying is now today you will say that see Nestle was at 70p, you should have bought it. It was see these are good companies, they continue to do well. Sorry, there was another good company called Levers, which after 23 years is underperforming the index with dividend. In case somebody thinks that I don't remember to count dividend. So I'm saying you look at it like that and you will not find. For example, today people say that HDFC Bank wish we it was we were there in that time. It was just so easy to make money. So please read Aditya Puri, where you were saying that he left in 2020. He actually retired in October of 2019, and his interview came in Economic Times. And in that, after his retirement, means the day after or that last day, and in that interview, saying that my wife was worried that whether we'll have to go back because they had come from Malaysia.
Yes. Yes.
And he says that we won some award after 2 3 years. We won some award, like from a magazine, maybe Business Standard type. They always give these best bank award and all that. So when we won that award, we were feeling that okay, now we are safe. So that is the company's CEO's view at that time live. And then I was telling this story at one of our conferences in Chennai, and one guy told me that his close friend was one of the early employees of HDFC Bank, and that friend told this fellow who was there at the conference that in 1998, when the stock went to 60 rupees, the IPO was at 10, and so obviously their initial ESOPs would have been at 10. All these guys, including Mr. Puri, sold off whatever, not maybe I don't know, not 100%, but sold off a large part of their ESOPs in 1998, saying, "Who's giving 60 rupees for our stock?"
Got it.
Obviously, you can see it in any stock, any company. If they've sold anything, I can turn around and say, didn't they know? Because nobody knows. If you look at Bill Gates, look at
Yes.
Bill Gates. Bill Gates has less in Microsoft than Steve Ballmer.
Yes.
Bill Gates, his net worth is higher, but not in Microsoft stock. And actually, Microsoft has outperformed nearly everything since Satya Nadella came. And you please type and see, Bill Gates hired him. So Bill Gates hired him means he was in that whatever committee, and he was at that time a director of Microsoft. So Bill Gates did not know that Satya Nadella is so good, but some outsider fund manager is supposed to be able to evaluate management and say, when Satya Nadella came, we knew he's a great guy, so we loaded up on Microsoft. Because Bill Gates continued to sell for the 1 or 2 or 3 after that. Now I think he's gone so low, maybe he has 2%, 0.5%, whatever. He has only 5, 10, 20 billion out of his whatever 100 billion net worth in Microsoft, whereas Steve Ballmer has 70, 80 billion. But that means the founder, the guy who recruited, the guy who previously would have been his boss, recruited means he was an insider, but not recruited, whatever is the word, selected him to be the CEO, did not know that I have got such a big star that for the next 10 years, this stock will be the best stock, or not necessarily the best, but one of the massive outperformers, and he sold it.
Got it, Sami. Just I listen you, and I let me put across another argument. See, all the investors and everybody do a extrapolation of Indian economy, right? They keep on saying that we are currently 3.4 trillion per capita, $2,300, and with the per capita income rise, the consumption will boom. In many stories they keep on telling, and which is probably true as well. But let's understand. Let's say for currently, I want to value a one company. Let's say for the sake of example, I'm taking a name of Asian Paints, right? Now, I want to value that company for Asian Paint has been a market leader in the paint probably last 30, 40 years. Now, I know India is very poor country at the moment, and next 20 years going to be really good for Indian economy. Per capita consumption will go up. If you compare with any, even China, the per capita paint consumption, India is very far, right? So if you
No,
extrapolate
no,
that,
before that. Tell me one thing in which India is not far.
everything is far, right?
So
So
far, everything is far, but
yeah.
so
No,
how
I'm
does
just,
it
I got your
matter?
point. So, my point is, let's. I want to value the company. Should I extrapolate the earning for 20 years? If I doing it, what is the error in my process? So, if I extrapolate
The error
50%
is
growth,
the error is that the last 20 years in any company, let's not do Asian Paints because we might be interested in different ways in these stocks, including in Bajaj Finance and all. But in a big picture sense, if you look at a company which last 20 years grew high, well, strong, whatever. First is how much, let's play a blind. How much do you think these companies grew in the last 20 years? What do you think of the revenue growth of Pidilite for the last 15 years? Type
so
screener.in and see just now, please. It's not
yeah,
even 12%, which is
got it.
below our GDP growth in nominal terms. But before that, let us say a company did very well for the last 20 years. And therefore, we say that it will do well for the next 20 years. So 20 years ago, what did you think about this company? Because
Exactly,
20 years ago, it may not have had a 20-year history.
exactly.
And if the same company is to do well, that means 20 years later, you will say that since this company has done well for the previous 20 years, I will hold it for the next 20 years. So then just big picture, everything is big picture. Rest is all story. I mean, rest is all, big picture is the biggest thing. How many companies have grown 30% per annum or 25% per annum for 30, 40 years? Give one name, zero.
Yes.
We can't start from not say that, from that fellow on first day had only
Got
150
it.
lakh sale there, but I'm saying on regular, say after 3 4 years when the sales were, otherwise I'll say, I went to US and I borrowed $750 from Bank of India for my ticket or something. No, not ticket, sorry, for the FX that I was allowed to take. Can I say I have made infinity returns because I
Yeah, got
started
it.
with a negative number? I said, so not that. You will say after 4 5 years, batao yaar.
Got it. I mean, the point you're trying to make, because of the base effect, the CAGR, the historically looks great, but if you
No, no,
split
no.
that in,
There are
yeah,
many things. First is because you did well, maybe 10 other companies now want to do it. You did well. Okay, let's get about your fundamental. Let's talk about the stock price, which is more interesting. So 10 years ago, the stock was at a certain valuation. There was a certain expectation from you. So you outperformed the expectation and the competition was less. Now, because you have done well, I'm not talking Asian Paint, I'm saying any company. Now
yes,
20 other guys have come in or 10 other guys have come in. How is
yes.
it the same? And the valuations are 5 times, 3 times. So how you tell me how you can project the past into the future? How?
Got it, got it. So Samir, so for example, like you said that when you buy like Barun Beverage or whatever companies you buy, and let's say 1.5, 2% allocations, and that's
No, not one
like
and a half, two to three.
two
Let's
to
say.
three percent, and let's say it's
Ah.
compounding well and gone 4x, 5x.
अपने
So
आप, no, no. Point is, if it does well,
mm,
you can buy more. No,
yeah,
what
it's
I'm saying is the our logic is that you will never know exactly that this is multi-bagger for life.
okay.
But it looks from our whatever we do that it is worthy of being in the 20 or 25, that second group stocks that we own. We own 10 stocks which are bigger stocks, like this HDFC Bank, State Bank, and ICICI Bank, and whatever. But on the second group, I'm talking about this, what we are discovering, let's say. First one, we say we are not discovering, we are choosing. I may say that HDFC Bank I discovered in 90s. By the way, I used to own 5% of Kotak Bank in 2002. I mean, that is Alliance, and I was a fund manager. So we could say that in 2002 we discovered it. But now, if somebody owns it, you're not discovering it, you're choosing it. So in the second group, you're buying 2 3% per name, 20 names. So 50 60% you're putting, and 40 50 in the first one. So in the second group, if it uh, if it first of all, if you don't buy it but you think it is good, but you say, no, I will not buy it because my hurdle is so high that I only buy 10% of the company, not of the company but of my portfolio, or I don't buy, which is what the concentrated guys do. By definition, they can't buy it as early as I can buy because I am buying 2% only. Correct?
True.
So I assume they need much more data. They need much more conviction. I say 2 3 year data is enough. They'll say 5 year data is enough. It can't be, right? And
Yeah.
anyway, I can buy 20 names, and they, because they're concentrated, they can buy 7 8 names. So by definition, they'll take more time. I
True.
psychologically cannot handle it that I liked a stock and I liked it, but I say no, I will wait to get even more so that I can buy even more. So then what happens is I'll say, bloody, I looked at it at 100 and now it is 150. So I will not be able to buy. I'll keep waiting for 110. If I have bought 1.5, 2%,
Yeah.
and if it does well, I can add. We have made some stocks 4.5 also nowadays, which are in the second group, but not in one shot.
Got it.
So it has gone up on its own, and then you've added some. Because then you feel it is your stock, number one. It's not, you are not buying another guy's stock.
Got
And
it.
secondly, you don't feel you missed it, even though you may have had only 1% or 1.5%. That is what you guys have to do. You can't wait for all or none because then it looks that shit, I was studying it from this price and now I have to buy it at this price. No, I will not buy it. And then you keep waiting for that original, not necessarily the price, but you keep waiting for these things. So it's better if you like it, put 20 and look. And by the way, who says that if you buy like that, you will only land up with losers? There'll be some stocks that will surprise you positively also, no? Like Varun Beverages has surprised us.
Got it. So, Samir, in that sense, what is your exit strategy? For example, let's say if you have the second group of stock, let's say 20 stocks, right? And you are a fund manager, you need to maintain those percentage allocation and all other things. Like,
No, it's
let's say,
not. Please understand. It is not as a fund manager that I have to maintain that allocation. I believe that is how fund should be managed. It's not that anybody says, unless it's a highly regulated. We are in a hedge fund here. So I could say that I will buy 10% in 10 names, and that is also somebody's story. All
okay,
I know is that that is a lottery. And so the guy who wins that lottery, I have no respect for him. That is my only problem in life, because I have never seen, including Mr. Buffett, a guy doing it again and again. So it then you keep worrying about which batch, like they do in this private equity, which vintage. So the same guy will say, my 2005 vintage is doing very well, but my 2007 vintage is doing badly. So in a fund also, if there are massive corrections, it will matter, of course, which year you came into these things, right? But in a big picture sense, I don't think that is sustainable for the new guy, and I can't be running it for the guy who came on day one. That is my issue. But it is more my interpretation of how I should do it.
got it.
So, Samir sir, I have couple of questions. So, Tanmay, can I go ahead
Yeah,
with my
please go
question?
ahead, go ahead, go ahead.
So, Samir sir, like you initially talked about China plus one thing, which is a
Yeah,
mega trend in itself.
yeah,
So,
yeah.
would you like to share what's the, I mean, if we talk about domestic demand in China, any view over that, and which sectors do you think benefit with this?
In
I mean,
China,
which top
no, no, no.
yeah.
So, no, no, sorry. I don't know about domestic demand in China, except that I know it's doing badly. But I don't know specifically. I'm saying in a big picture sense, the FII. So the if you look at the emerging market benchmark, and the ratios will be the same even if you have any other benchmark, is broadly that China's weightage is around 30% and India's weightage is 14, and the rest is Korea, Taiwan, and all these places. So not, I mean, if you saw day before yesterday, it came in Financial Times. I think that this Canadian pension fund is saying that they will not be allocating money to China anymore, and actually they are shutting down their Shanghai office. This is across the board because people have been burnt, and they don't feel they've been burnt because the economy turned bad, which they thought will do well, or things like that. They feel, from a distance, I also feel that it is a specific uh, policy driven decisions which have hurt these stock prices and effectively hurt investors. It has not happened randomly, and this has happened because, for example, these tuition companies, edtech companies, the Xi Jinping thinks or thought that a high cost of tuition is making it difficult for Chinese women to have more children, and now they want two children or more, and they therefore he announced one day that this tuition has to be not for profit. And you type and see that in maybe 5 days, these $15 billion companies went to actual zero. Oh, these companies were listed. They had massive foreign ownership. Then you look at Didi. Didi is the Chinese Ola, Didi or Didi or whatever. So Didi went public in New York, I think in 2000, पता नहीं कौन सा 21 ही होगा शायद. And less than 1 week later, they were raided by Chinese version of our whatever ED or whatever, saying that these companies have a lot of data, and these data should not be owned in companies which have foreigners in them or effectively which are listed in New York. So the IPO happened. Please check. I don't know, but some 16, $17, and then 1.5, 2 years later, it was taken private again at $2, saying that now we will list it in Hong Kong. So like this, there are five, six. You look at Alibaba and Alipay, where the IPO had happened, even the money had been taken from the investors. We had also applied for our global fund, and our money had been debited and converted to Hong Kong dollar. And that day they canceled the deal. And you imagine we got our money back, but all these Temasics and all these guys, till 1 hour before were thinking that they are sitting on massive unrealized gains of 3 billion, 5 billion each, because the market cap of the company became, I think, 230 billion or something. IPO price, I forget all these numbers, but some obscenely big numbers. And now what is 20 billion? So the investors are frustrated. And when they are frustrated, we don't need China play. They come to, because they have to invest, emerging market portfolio managers have to invest, Asian fund managers are not going, nobody's going back to the investor to say that, you gave me money for Asia, but I think that China is not doing well. So can I return the money to you? No, they will sell a story. You gave us money for Asia or for emerging markets, and arey, we found India. So that money, when it comes to India, doesn't have to buy some China plus one play. Then it becomes a regular India money. So it'll go buy everything, including banks, IT, whatever they have to buy.
Right, sir. So when the domestic demand in China is less, than the raw material pricing comparatively, India gets better. So which sectors do you think can benefit the most from this China plus one theme?
No, that's what I'm saying. I am not looking at the see, when the fund manager decides that last $1 billion is coming to India, then he's not comparing in that sense to China. He'll buy whatever he likes in India. But if you are talking that whether there is weakness in China, what does it mean? It means that the commodity sector is not doing well. But anyway, we don't buy commodity stocks, so you will always say that. But I'm saying, don't look at the flow from China to India to then see what was happening in China. That allocation has moved to India. You might buy by banks. Then you look at Indian index. No. Then you look at the regular stocks, what we look at. But if you mean that if China overall is doing badly, here we are talking of the flow of FII. But if we are talking that fundamentally China is slowing down, which also I believe it is slowing down, that is a separate bullet point.
Got
If
it.
we are not, that. So there, I would agree that broadly commodities will do badly, and that also it was a bit obvious. So after the China opened in whatever between October and December last year, there was this big rally that China is opening up, and therefore the world will have more growth and everything, and even our commodity stocks and global commodity stocks went up. Was it not obvious that the China opening was not that some projects that were not being implemented will now be implemented? It was clear that the first few rounds of opening will be only Chinese consumer going out, being allowed to travel, being allowed to go to the shops, and that was the opening, and go to Starbucks and buy Louis Vuitton. There was no angle that some bridge was being made and has been stopped, because those kind of things are not stopped. And anyway, there is over investment in infra there. So that play was that these guys will travel a lot, and therefore all these Louis Vuitton and all these stocks will do well, and they did well. But now even there, the follow on, I believe, is not so much in terms of Chinese consumer, like spending for his pent up this thing beyond whatever 6 7 months he may have done already.
Thanks, Samir.
Right.
So, Samir, just one thing. You made a handsome gain in the hotel sector too. I'm sharing my experience. Last week I was in India,
Hmm.
and for the corporate even I was struggling to get rooms for some of the colleagues
Correct,
because all hotels are jam packed. I'm
correct,
talking about the
correct,
big name like ITCs, and
correct.
is the hotel theme going to play the way it played out for last 2 3 years, or
No,
you're still
obviously not. Obviously not. Although I own both the hotels, and last year they were very good. Like I think Indian hotels was up 70 80%, and Lemon Tree also was up. So obviously it can't be. Now we are pushing it one more year, saying that we are having G20, and then this cricket will happen, and all these things. Plus, the big picture story is and was that the hotel industry new supply of rooms is some 2 3% per annum, which used to be some 12 14% per annum for many years. And after 2018-19, when the investments that had been made in 2007-8, those projects had to be completed. So those hotels were completed in some whatever 13, 14, 15, and then after that there has been no new supply. Now beyond that, who knows? But all these hotel companies tell us that these cycles last so many years. But in a big picture sense, I can tell you that I lived for 1 year in now called Trident Nariman Point, that time called Ubrois. And in 1993, it was 6,000 rupees per night.
Okay.
And till about 2, 3 years ago,
Yes.
uh, actually even 1 year ago, I could get a corporate rate, not in the Nariman Point, but now we stay in the BKC Trident at 6,000 rupees a night. So actually, for 20 odd years, the rate was the same. I mean, little bit you can say that was Nariman Point and this is BKC. But I think Nariman Point also is 7, 8,000. Now suddenly it has become like 15, 20,000 for these rooms in the last maybe 12, 15 months. But not even immediately after COVID. Now only.
So do you think is a temporary? Because if you look at the operating margin for India hotels, it's never been consistently more than 20, and now
Yeah,
last year they
yeah.
reported 31%. So
Correct,
do you,
correct. No,
the
no, so
way
that's what I'm saying. See, we take our profits along the way. Nothing in our life is more than 3.5%, and we don't believe that every stock we own is for 20 years. But that does not mean that we will not buy a stock for 1 year. But we, as I said, we are pushing it now. Right now, we are in the mood that we want to continue for some more time, and then we'll see. Our analyst is supposed to check every now and then what is the occupancy and what is the pricing, and we'll see. But we don't push these things to say, oh, I have found my retirement stock or something.
Yeah, Savit, so got your ideas. I have listened a lot, but still, I have one question. So, for example, there are two types of investor, right? I one side the people say that buy and hold, which you don't agree, right? And you can see that some of the guys become very popular in the last 3 4 years by selling those ideas. The other strategy which you are telling that nothing going to be permanently good. Try to make money whenever they're doing good and exit if you're not doing good. But then
No.
why
So
use
the way we say it is, the way we say it is that we will buy a stock with a 1 to 3 year view and review it with anyway, even those guys review and review it with a 1 to 3 year view.
God?
And if somebody is continuing to do well, we will continue to hold it. But that does not mean that I will not, on the margin, reduce my exposure for two angles. One is that when these stocks are going up so much, very rarely do we believe that this is 100% justified that a stock is supposed to double in 1 year. No. So if it has doubled, we'll say 30% weight कम कर दो, वो वैसे ही double हो गया. Suppose 3% suppose becomes 6. We don't want 6% in a
Hmm.
hotel stock. So we'll say इसको 4 कर दो. So it
Okay.
is still there, meaningful. But and very few stocks, which for me maybe been पता नहीं 10, 15 stocks होंगे in our life, which you have held for like 10 years and more. Mostly this Kotak Bank and HDFC Bank and in the 90s all these IT companies. And so the point is, I reject the idea that somebody can go in and say that I have found a 20-year story. It may become a 20-year story and we may hold it for 20 years, but you don't know and neither does the management. आप जितने भी तुक्के लगा लो, if it is doing well, you hold. For example, what does Mr. Buffett say? Put all your eggs in one basket and watch the basket closely. Please explain to me, what does watching the basket closely mean? It either means that when something is going bad, I will sell. Because if you say that watch the basket closely, but if it does badly, doesn't matter because you are long term, then why were you watching it closely? You could have said, put all your eggs in one basket and enjoy life. So we are watching the basket. If it does badly, we'll sell it. If it doesn't do badly, we will not sell it.
Got it, Samir. For the sake of audience, I'm stretching the discussion. I completely buy your point, but I'm
You can
stretching it.
ask the audience for questions now to
Okay.
give variety.
Yeah, okay. So just couple of questions, then we'll go to the audience. So for example, let's say, in last couple of years, like crude were, very high, and therefore some of the paint companies, let's say example for the paint companies, their operating margin fall because of high crude and everything. Now, let's say I am an investor or any retail investor buying those paint company, right? And that time, definitely the profit is falling, the price to earning looking very expensive. So, what is your approach should be? I mean, that the reason for the stock is not performing or the company is not performing in short term, and once the crude reverse, probably profit again go up.
So the
So,
best example is HDFC Bank. It is our number one holding, and for 3 years it has not moved. When the NAVs are up, whatever 90 in those 3 years from March 20 to now, and it has not even up 10% per annum. So it's still our number one holding. The answer is you have to see each stock and justify it on its own. It's not that every stock we own is up. Last year we had Piramal, which was down 40%, I think. And we had Quest, which was down 30%. So ये तो हमेशा ही होएगा, and you have to choose. Now I still own Piramal. I didn't buy any more, but I said, fuck it, I'm not selling it right now. Let's see. The point is, this is part and parcel of this game. It is not that only a stock which is going up we are holding. Many of our stocks don't do well. HDFC Life didn't do well for so many years. Even now, it's not doing well. So, as a stock, I mean. So that is part and parcel. That is why you're supposed to own 25 stocks, because some of them will not do well. You can do what you want and it will not. And you look at all these guys who have 10-year and 20-year holding, they say. But can we analyze? Because when a guy who owns 10 stocks sells one stock, he has sold 10% of his portfolio. Whereas if I hold 30 stocks, and anyway, my one group is big. So in the second group, I'm owning 20 stocks, and each of them is 2.5%. I have to sell four stocks to get a 10% this thing.
got it.
So their turnover is higher than mine.
Got it.
It is just that we are arrogant about the fact that we are not arrogant.
Thanks, Samir. Samir, one of the questions some of the audience has asked your view on the defense sectors. I know you are not owning, I think, but still, if
No,
you have any,
we own Bharat
you,
Electronics.
okay,
We own Bharat Electronics. The thing is that because they were all PSUs initially, we didn't buy, but now we own Bharat Electronics for maybe 1.5 years. But in a big picture sense, it is true that the government is focusing on this and can create demand for these companies, because it is more difficult to say make something for the world. But if you, as in the government, is the buyer, and everybody knows that there are some things which Indians could have done even in the past and have not been done. So that part I agree. My problem is that it is very long project. So for the reason out of these 2 3 stocks we bought electronics is because one of them is talking about submarines and one of them is talking about air force, and then suddenly in one budget they say now we are focusing on submarines and one we are focusing on aircraft, and then these projects are 7 years and 10 years. I don't relate to these things. So I said electronics is easy because they will go into everything, kind of a big picture logic. But on these private companies, these smaller companies, if you just see their sales value, it's like 150 crores. I just psychologically can't buy a company because we are not that small cap investors that if its whole sales is less than what we think we could make in 1 year, we don't buy these things.
yeah. So another question, Samir, is somebody is asking about your views on the railway sectors, because government allocation in the railways is going up every year.
Yeah,
So are
we
you
will
owning
not buy.
anything, or what is your
We will
view?
not. So the I don't know exactly which stock, but in a general sense, uh, I stopped looking at the railway budget 2 3 years before the railway budget was shut down. Otherwise, all my life we used to look at railway budget and the central budget. And I used to fly when there was no internet. I used to go from Singapore to Bombay to see the budget and all that. And every time we have wasted money in looking at this company has got an order from this fellow, and now government is spending money on signaling, and now they're putting on laying tracks, and now they are buying wagons, because these things have not worked beyond those 6 months. In not one company in my 26 years, I would have made any reasonable money on the basis of a macro order. Means macro order means that suppose you say in the budget that this year the allocation to signaling will be up 33%, and suddenly we start looking which is the signaling company which is listed. Because these, who will get the order, will it be export or import, will it not export, import, I mean foreigner or Indian, and then whether they'll get paid. So now we don't get excited by anybody getting a road order, water order, train order. We are not interested, we don't even want to know. But in defense, because it was a bit focused and there were three only companies, and you know that randomly a seventh fellow will not come. If you see the construction companies, these infra companies, how many companies have come up? You don't even know. There's the South company which is completely unlisted, which is nearly as big as L&T. Nobody knows who will get what and why. We don't like all that. So we are not interested in railway as of now. Again, somebody has to convince us, then we can change our mind.
Great. I mean, Samir, I spoke a lot about the sectors. I was listening one thing you explained in some of your interviews about 8-step framework, either to eliminate a stock or pick a stock, right? So could you please explain all those steps for the audience so that
So
they
it's
can learn
not
from
eight steps. It's eight factors, but they are not.
eight
I mean,
factors?
step
Yes.
would mean a sequence. It's not a
Yeah,
sequence.
eight
So the
steps. Sorry.
big picture logic is as follows: that uh, if there are 500 stocks in the index, and my job is to beat the average return of this 500 stocks, which is called the index.
Yes.
So if there are 500 companies and their returns, okay, and they'll be multiplied by market cap because they are cap weighted, but that doesn't change life. Broadly speaking, half the stocks will do better than the index and half will do worse. This is just arithmetic. इसमें
Okay.
कोई वो नहीं है. So the people who say that only 20 companies do well are basically saying that 20 will do better and 480 will do worse. Not arithmetically possible. In one extreme year, which also I have never seen in my life, will it be that narrow? But it could be many years in which, say, 150 do better than the market and 350 do worse than the market. So, for example, if suddenly Reliance or HDFC Bank or something went up 40%, suddenly the index will go up, but the average market would not have gone up. Or sometimes it'll happen in reverse, like it happened in 2014, when maybe 300 companies beat the index because the big companies did not move and the smaller companies did well. So it was very easy to beat the index. Like we beat the index by 52% or something that year because we were all up 74, 75%. The market was up some 25, 30%. So the point is, on average, it will be 50-50 or 45-55. That means some 200 companies are doing better than the index. So if 200 companies are doing better than the index, some 150 are doing much better than the index. That's by definition, right? But
Yes.
similarly, there is the other side of that line, that some 150 companies are doing very badly. For example, last year the market was nearly flat and my Piramal was down 30%, and Quest was down 30%, and L&T Tech, some of it I had, some I didn't have, was down 30-40%. And on the other hand, Varun Beverages was up 110%, and say this Indian Hotels was up, or even ICICI was up. What I'm saying is, even with the flat market, there are these massive things on both sides. Okay.
Yes.
So there are some 150 companies doing very well compared to the index, not in absolute I'm talking, and some 150 doing very badly compared to the index. It is just the way that graph is. You can see it in one of my webinars, which is there
Yeah.
somewhere. So now I have a new stock which I have to decide what to do. I have to say that what are the factors which will make it come in the better half.
Okay.
And Except because I don't know what will happen to this stock next year. I don't know which are those 150 stocks. All I know is that there are 150 stocks all the time just because of the way an average is calculated. The average is at some 230, 240 number. Therefore, anything to the left of that is doing better than that number. So 200 are doing better than 230 and 150 are doing so better that if every year for the last 18 years you had only owned the 150th best stock of the market, not even of the market, of the index,
Okay.
you would have been up 100x. Okay,
Okay.
so this tells us two things: that there is no need to concentrate. You will be blessed if you could land up with the 150th best stock of the market, but you don't know ahead of time whether it will be this side or that side. For example, last year Asian Paints was in the bottom half. So now I have to figure out what I think are the prospects of this stock being in the top half or bottom half. So what are the ex ante factors which make a stock do badly in in general? Because once in a while everything can do well also, right? So in general, the things which don't work are if it has a bad history, if it has bad industry, the way we can tell you what it means, or it is a bad theme, or it has bad management in terms of known bad, or it has bad corporate governance, known bad, or it has very high valuations, or it has financials which we think for the next 2 3 years the results will not be good. All these things we say we will therefore not accept, because even one of these factors increases the probability of a stock doing badly. Now, in reality, many of the stocks which we think will do badly might do well. For example, I will say I don't like some paint company because although I know it has a good history, good this thing, good this thing, but its valuation is very high. And the other side will say, no, 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 this valuation is justified because it has all the other good things. So what they are doing is a like a trade-off, that the valuation is justified because it has good history. And I say no, even one bad factor is too much. Now, if that stock does well, because I thought it will do badly, but it does well, तो क्या हो गया फिर? तो क्या हो गया फिर? Because according to me, 150 stocks do well.
Yeah. Yeah.
So if you do well and I didn't have it, I still have a chance of getting into the other 149. Anyway, I don't know which ones they are, but I'm saying in the way you think. Now, if I thought that only 20 stocks do well and only 20 stocks is the universe, then you say that this paint company is good and I say it's good, but valuation is very high. But you say, historically this, that. I said, हाँ बात तो ठीक है, it can happen. And I say, no, but I will not buy it. Then I'll be worried all the time that, only 20 stocks do well in a year. If this stock bloody ends up doing well and I don't have it, that means I have only 19 chances left.
Got it.
But if I know that 150 stocks do well, I say, go to hell. I have 149 others I can choose. So we don't want to do a trade-off except when the stock is with us and then it becomes expensive. Then we drag it a little bit. Like Titan and all, we say, okay, चलने दो अभी हमारे पास है, let's see how far we can push it. But we will trim it and one day go to zero in anything which is wildly outside its range, because it works only once in a while and you don't know in which case it will work, but it does not matter. For example, a specific example which is easy to give is because the stock does not have a future, so we don't have a position, is DMart. So I sold DMart in maybe May or June of 2020.
Okay.
Okay, in May 2020, what had happened was that uh, the stock was already up some 25-30% that year. It had started the year being expensive. The country was shut down. Reliance had been funded, and these guys did not have any good online strategy. And the stock was up 30%. Okay, some 25-30%. So we said, bloody, this return, if everything was doing well and we had made this money in a year, we would have been very happy.
Got it.
So we sold it. Now, after that, it went up to whatever, 5,000 or whatever. So it went up some 80-90%. तो क्या हो गया? Our market also went up 80-90%. It's
Got
not that I sold that and bought. I did not put in a bank account. But one day, correct. And now, if you see from today, it is up maybe 30-40%, while the market is up 100% or 80% or whatever. So, in the end, these things, if you miss one, you are also buying something else with that money. It's not that we are saying this or bank.
got it.
So, these 8 factors are that we want to screen it on these 8 factors. And once in a while, we also change ki nahi, nahi. But big picture, 95% of the time is that if we or the analyst or the team feel that on one of these 8 factors, it is bad. We are not saying good, by the way. Huh? We are saying
Okay.
it should not be bad. If it is bad, it is out. If it is not bad, it is okay for not being bought, but to not be rejected. So I'll give an example. Let us say we find a new company, I mean, IPO type. So the company was around for 5-6 years and now it's going public. On what basis am I supposed to say this is good management? I have no idea. You being private, you will do different behavior. The test of everything is public market because you have to give ESOPs, you have to give this, you will sell your share, you will hire your brother. Private, you can do what you want. So if we don't have a specific bad thing about that fellow because he looks educated, he has created whatever he has, we will say management is not bad. That means this factor is not being used to reject. But it does not mean that we are buying it on that factor. We have to look at the other 7 factors. So the idea is that everything will never ever be good. That means all 8 will never be good, ever. According to me, ever. But some people say, oh, in COVID, sorry, in COVID, the expected financial results were supposed to be bad. So, for example, if I look at a company whose multiple in the past was say 30, and today it is 32, and you choose whatever factors you like. Now, how can I say it is good valuation? But it's not bad valuation. It's sort of in range. So we'll say, ठीक है ना, valuation is not the issue. Mota mati, it is in line. Leave it. Talk about what else is happening. Maybe the results are better. Maybe sector is doing better. Maybe the government trigger is there. Whatever is there. But valuation is not bad. It doesn't make it good.
Got it. So, Samir, so you bought, I think, some new tech stocks like Paytm, Zomato's, right? So, if you
Only these
put,
two. Only these two. Yeah.
okay, this too. So, if we put this in 8 factors, just for the audience, can you explain
Yeah.
that which factors push you to buy this?
So both of them we bought massively after the correction. So we bought Zomato at 42 and Paytm at 520 and both of them we announced also. So there's nothing bad. Which factor do you think is bad? Because we see, the thing is, the difference is because we are too smart. So we are not saying we buy 8 good factors. Please understand.
Got it.
We are saying no factor should be bad. So I'll explain in the easier way. Let us say you're buying Indian hotels, which we did after COVID.
Yes.
Now, after COVID, the hotel is closed. So if anybody comes and tells you that we buy good companies with good management and good ROE and good ROC, he cannot buy Indian hotels because the hotel is closed. And nobody knows whether it'll open now or after 3 years. Nobody knows whether there is a vaccine. Nobody knows whether a vaccine will be available in India. Because let us say this is August of 2020. But we bought it because we say, considering that the hotel is closed, the results are not bad because maybe they have cut cost, maybe they got some revenue from this COVID related, doctor shoctor staying, and their leverage did not go up, and they are part of Tata. So if little bit leverage goes up, or if this thing is extended, maybe they'll be able to do it. They have some foreign assets they can sell. But can I say they have good results? No, but they are not bad. But let us say during this period, when the first result comes, there because a big loan was due, and that loan has been called, and therefore, and there is nobody funding them. So then the results are bad. then nothing else matters. Then it doesn't matter, okay, this is a non-disrupted industry or it has become very cheap. That is what I mean. Everything cannot be good, but everything should be not bad. So, in all these companies, you tell me what you think is bad. I don't think anything is bad.
I
Some
mean,
of them may not be good. That is a different game. But anyway, so if you look at Paytm, let's say,
okay.
are you looking at results? What is
Yeah,
bad? I didn't find anything bad. No, that's what I'm saying. The point is, you have to say it as bad and not bad. Please understand the difference. No, if
got
a
it.
company there is a path to profitability that is allowed by yes, it's not that that should make profit.
Got it. Got it. I
By
mean,
the
so
way, the
yeah.
whole first of all, even if you look at it independent of all these things, that if you stop making losses,
Okay.
which both these guys have actually stopped other than ESOP
Yeah.
charge, which also I can explain. But if they've stopped making losses and they both have $1 billion, that kind of thing in cash, hard cash, okay,
Yes.
not, it's an option.
Yes.
You are not going to lose money for 2, 3 years. And if you keep growing, there'll be interest in this thing. There is no formula that I have to do net present value right now. I have to play a concept, but according to me, the concept is none of those eight. If I look at the fact that in 2015, Paytm got valued at 5 billion, if I say that the brand is worth X, if I say that phone pay, which has still not started earning money, has been funded by $12 billion by not just Walmart, but by this General Atlantic, ki pata nahi kaun se wala P. I can use whatever logic I want, but it's not bad. And I'm
Got
getting
it.
it in a listed space. For example, Swiggy. Swiggy was valued in 2021 at 11 billion. So now they marked it down to 5, 6 billion. You think Swiggy can go public? If Swiggy doesn't go public in 2 years, it blows to zero.
Got it.
Story over. And Swiggy cannot go public if Zomato does not do well. Because who will buy the next one when you are questioning the first one?
I heard your argument on this.
हाँ, तो
Well
ये
said.
सब चीजें बड़ी सारी चीजें होती हैं. But the question is bad क्या है इसमें? These are bets. And the other thing is 2-3% वाला bet होता है ना ये,
Yeah.
तभी तो गेम है सारा.
Yeah. Yeah. Got it. So, Samir, like for example, I personally recently, like last 1 year, started buying some auto names, because auto has gone through a like 4, 5, 6 years of underperformance, lots of headwinds in the sectors. So you also, if you see some of the auto numbers started picking up, right? So why you ignore, like you
I
ignore
don't
the
like. So now in hindsight, I missed it or wrongly interpreted it. But although now I bought Tesla about 20 days ago, but big picture, my logic is, which has not worked, but I will not buy now. So the big picture logic is that previously there were, let's say, X number of auto manufacturers.
okay,
Okay, say whatever, 20 in the world or whatever, 30. I mean, obviously there were many country walo alag alag, but I'm talking the big ones. And now, so you told everybody that, hello, sorry, you can't make these IC cars, you have to make electric cars. And you have 10 years and 20 years or 15 years, but you have to convert to EV, right?
yes,
Now, all of these guys have to spend billions and billions and billions of dollars. If you type on Google, you'll find that Volkswagen's EV budget across all its lines is more than 100 billion. Daimler is 67 billion. Actually, our Tata Motor also has 15 billion. So when they convert to electric vehicle, has anybody said that the number of cars that you sell will go up? No. You are doing it for an externality. So all these guys to remain in business have to uh, invest. And then it's possible, of course, that somebody's new electric vehicle will be better than his current IC car, so his market share will change. But I'm talking collectively as an industry first. Then the industry has to spend 300-400 billion dollars just to remain in place. It's just that instead of making A, now you will make B. Second thing is, nobody has said that the number of cars that you will sell will be more. Has anybody said that the margins that you will make when you make electric will be more? No. But in addition, what happened? There were these 20 other random fellows like Tesla, like Rivian, like पता नहीं कौन who suddenly said, अच्छा electric cars, ये तो हमें भी interest है.
Got it.
So in the same universe of car making, instead of 10 players, now there are 20 players. And these 10 new players have their own game because they are coming funded by ABC or they like this or whatever. So now the same industry, now there are 20 guys, and the first 10 have to spend billions of dollars. So you please explain to me why you like auto sector. Just because the stock has gone up, I can't say anything.
No,
But
like,
as a separate aside, can
yeah.
you please type on Google or tell me what do you think is the P of BMW?
Okay.
Okay, tell me now first.
Yeah, let me check.
No, no, no. Tell me. I know. You tell me
I
what's your
okay,
guess.
okay. I don't know.
And
I mean,
by
let
the
me
way,
10,
it is a
10.
cash-rich company with six, I think, or $8 billion cash.
Mm,
Okay. टाइप करके बताओ मुझे ही बताओ 3 होगा मेरे ख्याल से या 2.5 होगा देखो
6.3, I guess.
ना ना can't be
Yeah, so
3
BMW P ratio as on June 5, 23 is 6.3.
or then it must have had poor results. I thought it was 3 or something I saw a few days ago. Okay, whatever. So 6p. Yeah. So you
Okay.
know 6p is what we get for our steel companies and all that. But I think I when I saw it a few weeks, months ago, it was 3. I'll check tomorrow when I'm
No, I
getting
mean,
up from my sleep.
so I
Point
got your
is,
yeah.
point is now in between, uh, and now these our Indian fellows and others have done well. Actually, at least this year they have done well. अब क्या करें? Part of life.
And I got it. I mean, if you ask me that why I bought it, like, let me take the name of the company. Like, I bought Maruti, right? And the way I'm seeing that company, because when I was looking their revenue, if you look from 2017, when the stock was all time high, and if you look at the subsequent last 4 5 years, even last year, their revenue was almost 60 70% up from that. And the operating margin, they were trading like 15 16. They were like subpar of 8 9 types, and they started improving it. So I was just doing a simple math. The revenue is picking up. If the operating margin start improving it, and if you look 1 2 years forward, valuation looking very cheap because they were sitting on around 60,000 crore cash in their books, and kind of India is unpenetrated market. So I thought, people eventually will buy cars. So all those theories I played are very simple.
Very good. That is why everybody has to play their own theory. My theory is I will not go near it in my life.
Okay,
Okay,
got.
next question.
Yeah. So Samir, next questions. You also own some of the
No,
QSR names, right? So I want to
yeah.
understand your outlook about QSR in industry in India.
Actually, we own only one, which is
Devyani.
no.
Devyani.
We own this from 2016, which is McDonald's India, which is Westlife, not McDonald's,
Okay,
Westlife.
okay, okay, okay.
So we just think it is, done a lot of hard work. Then they went into coffee, then they did breakfast, whatever, whatever. So we have bought that as a thematic thing, and it has given okay returns, not huge returns, but okay returns. And it is good, but I don't own any of the others. The other one is Varun we own, which
Okay, okay.
is indirectly that
I mean, for example, KFC's like, and then the Domino's, which is Jubilant and all. So basically,
we
any
don't
reason
have.
because the story is,
No,
that, yeah.
the story is similar. The story is similar. It's just that, by the way, all these have not Domino's, but the others have got listed in the last 2 3 years. We owned it from before that. Continue. So another stock. This one we own now for 7 years from 2016, I think. So no, we just bought it. And pizza versus burger. Also, we didn't think. It is just that in Westlife or McDonald, we should not call it because Westlife only. But
Mm.
in Westlife, there were 2 3 events which were easy to understand by looking at US. One is that you do breakfast at that time when we bought it in 2016. That you will do breakfast, and the second one which they had started doing, but finally they have done it now, is that in the same store if you sell coffee, you are not paying any more rent, you're not paying anything. You're just putting one fellow there and a counter, and now you're putting the highest margin thing there. So the coffee has become a big hit,
Okay.
and breakfast is okay, and then this home delivery. So these were the things which were improving the productivity of that store, कह लो कि जो भी restaurant, because you are doing these 3 extra things compared to what you were doing before. But now what has happened, which is good, is that he's allowed. by McDonald's, I have to say, that okay, you can do local things. So now he's even selling, chicken base similar to KFC, I think. All these things which in the rest of the world they don't do as much to localize it so much. But its market cap is too low. That is my thing. It's just $1 billion, which is
Yeah.
pathetically low for this thing. Although it's half, he has only half, which is west and south.
Yeah. So Samir, next questions. So from Morgan Stanley report recently, they are telling that in the Indian consumer pyramid is getting reversed. So basically, the bottom strata of the of the economy is gradually shrinking, and the top, which is like 50 lakhs, 1 crore people who are having very high purchasing power, that particular continuously expand for next 10, 12 years, right? So if and predominantly that's a right argument, I think. So if that is the case, what are the sectors you are thinking going to be beneficiaries in 8 to 10 years for
So
next decade?
first thing is that Morgan Stanley report has come day before or whatever, 5 days ago. And
Yeah.
secondly, we have no interest in thinking from his report. But on our own, we have been doing exactly that, which is to say that we say we are only interested in under-penetrated consumer, not consumer,
Okay.
which means mostly middle class under penetration. So we are, by the way, we have another stock which hasn't done well, which is Campus. So the
Campus.
idea in all of these is you are buying brands which are going to the middle class only. Now McDonald's, who's going middle class,
Okay.
or which is the whatever कितने crore गिन लो आप, 30 crore, 20 crore people के लिए, rather than 130 crore के लिए. So we are also uh, mostly buying things which are for the 20, 30 crore crowd rather than 130 crore crowd.
Okay. Okay, Samir. Samir, historically, I think you spoke in one interview that 1999 or something, your fund give a return of some 260 or 290%, something like that.
Correct.
So
280,
could you tell the
280%.
story? How that performance happened. What are the stocks you're owning, and what was the reason so much overperformance compared to any other fund that particular time?
By the way, those were great days. But I many stocks went up. For example, Z went up 100 times in 2 years, and I had it as my number one holding.
Okay.
And then Infosys, I think in 2000, sorry, in 1999, it went up 15x. But from 98 to 2000 March, it went up 100x. And then it fell 30-40% before we sold the balance part. But 99 were crazy days. Infosys, I think, went up 5-6 times or something. I went to meet Infosys and I told them that how long do you expect us to subsidize you? He said, means? I said, your bloody stock is a 5 times. My number one stock is a 15 times or something. So those were different days of our life.
And you were not bothered about all those gain. I mean, like for example, the principal you keep. So G probably you keep on booking profit, or I mean, you was
No, we have to book. That is why
okay,
we are survivors, sir.
okay, okay,
The survivor is first of all, by definition, you have to book. Oh, for example, Z, every day for 200 days we sold because it was our number one stock. And the limit by SEBI rule is that was a mutual fund, Indian mutual
okay,
fund.
10%.
So SEBI rule is 10%.
Yes.
And we were at 10. So,
Okay.
so that's what I'm saying. When we say we made 100 times, it doesn't mean that whatever we bought on day one went up 100 times. That would be wild. You are saying first purchase to last sale because in between you have to sell. No,
Yeah. Got it, sir. So Samir, you also told that your all your money is kept in your own fund, right? So uh, I understand the point. You are managing public's money as well as you are managing your own money. But like some of the names like Rakesh Junjana, all those people, they become so big because they have like titans which are multi-folded and they didn't reduce their
correct,
allocations.
correct,
So don't
correct,
you
correct, correct.
feel sometimes that the individual money, even some of the companies doing really well, the compulsion force you to sell. Why don't you keep your
Actually, actually, that is not correct because my NAV is up 330x. NAV means
okay,
after fee of 2% per annum.
okay,
Okay, but
You're talking about
pre-performance
18
fee.
years from
No,
2005?
26 years
26 years.
from
From
96.
Alliance.
So, yeah, from Alliance to now. So, if you have 2% expense ratio, if I for 26 years add back 2% to say what it would have been at a personal level, it is more than 500x, while the market is at 24x. These are actual numbers. There is
Okay.
not a paper portfolio or a model portfolio. So I don't believe in that model.
Okay.
I don't believe that that model is there. But second thing is that when you are on your own, it's a different game because you can take leverage and you can do trade and all that. But I like I like this, and it's good
Yes, yes, yes. Okay, Samir. So far, great
because
discussion.
I started in a job in a sense Alliance. One day before I joined Alliance, I was interviewing with Boston Consulting Group. So if I had got Boston Consulting Group, this whole story would not be there. I was looking for a job. I was not somebody who was living day and night prior to joining Alliance that I want to be in stocks and I like equities and my family. Zero, absolute zero. So I have learned everything from a job. So first many years, it just happened that it started working. It worked in 90s, but I didn't come in with some training or love or interest. I just got a good job.
Yeah,
That
yeah.
is
So, Samir, you are very interesting. I know about how you end up being into IITs and then how you end up being into US along with your sister. And also, for the
correct,
sake
correct,
of
correct.
audience, could you share
You've
five
seen
minutes your
everything.
life?
Very good. Acha, let's finish it off. Now you're taking. I don't mind. I can keep talking, but all my stories you're putting in one.
I have done because I'm a big fan of you, Samir. I heard all
You're
of your
serious.
interviews, so
You're
I know
serious.
everything about you.
You're a serious researcher. No, there's only one line on this that I was working in Delhi and I had no interest of going abroad. But my sister, she had graduated from Delhi University from, what is it called? DC, what is it called? Delhi College of Economics or whatever.
Yeah, 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 yeah,
DC, whatever it's called.
yeah.
So she was going for a PhD. So I said, bloody, you are going, I'm also going. So we went in the same year in
Yes.
1988. And she completed her PhD foolishly, and I did not. So that is the thing.
I'll tell you, I think you don't remember it. I was during my campus days in IIM Calcutta. I saw Samir Arora in the honor board. And I was
Ah,
following you on the Twitter and I asked you, Samir,
so
is
you are
that
which
Samir
class?
Arora?
So you are which batch?
I am 12 to 14.
Acha, 14. Oh, बड़े
And
young हो तुम तो
I
यार. हाँ.
tweeted you, Samir, is this Samir Arora you? And then you replied me back, yes, that's me. So I know from that
अच्छा
day
अच्छा
I
अच्छा.
got the connection with you. And a great story, And one thing I love about the way you explain, the way you admit the themes you missed and everything, that's why you're so popular.
No,
Anyway,
thank you.
Samir, I think lots of questions you asked now. As you
Thank you.
said, we'll start taking some of the audience questions. They are
I
waiting.
I thought we are getting over now.
I'll take
Okay.
another 15-20 minutes because if it's time
Okay.
permits
Do
with
it
you,
fast.
and then
Okay.
then some of the people are waiting for a long time, so I just take
Okay.
few questions and then probably
Okay.
wind up. Yeah.
Okay.
Okay. So let me see the request. So I have allow you to speak discipline. That guys, can you please ask your questions? Discipline Dharam Khanna. Discipline. Dharam, you are there?
He's not disciplined enough.
Okay.
I can't
So
see you as a speaker. So, Samir, there is one question on you starting, mutual fund thing. So, you have license from last 1 year. So, there are a
No,
couple
no,
of.
no. So we don't have a license. We have in principle approval. And that in principle approval has to become a license. But may I just explain the timeline? So Bajaj FinServ got its in principle approval in September of 21. And we got our in principle approval in September of 22. And you know that less than 2 months ago they got their license. But we are hoping to get it faster than that because they are a big firm. So for them, if some question comes from SEBI on, let's say, how many customers you have or issues of customer complaint, they have they take time. We can respond faster. So we are hoping to get it faster, but it's not that we've had the license for 1 year. We don't have the license. We have in principle approval, which you then convert to a license by making all the investments and hiring the employees and technology and security and backup and all that we have done. So let's see. We should get it sometime in whatever, some days or months, whatever. But their track record is that Zerodha, for example, they got their in principle approval also in September of 21, and they still haven't got approval.
Okay. Okay. So Dharam
Takes
Khanna,
time.
you can ask your questions. Dharam, can you hear us? You can ask your questions. You're mute, Dharam. You can unmute and ask your
Fan
question.
here.
Yeah, yeah.
Hi,
Yeah,
Samir sir.
can
How are
you
you?
listen to me
Yes,
now?
Anji.
Let's go,
Samir sir, I
Dharam
just have
and
a
Karan. You come
simple
later
question.
on.
Yeah, so
Samir sir, just a simple question.
sorry. Oh,
Like,
Anji.
where do you get all this energy and the temperament? You're always smiling. I'm one of your fan and always follow you on Twitter and everything. Where do
And
you get
even
this
now at
energy and the
11,
temperament?
even
You're
at
always
11:40 in
so
the
so.
night. By the way, I
Yeah,
haven't told you.
definitely. Yeah,
I get up
it's
at
12, nearly
5:30.
12 in the night. Yeah. So where do you get this energy and this temperament? I want to know that.
अब ये पता नहीं जी, ये तो हमारे पिताजी की देन है कि माता जी की देन है. In the sense, I don't know, but I've been a high energy
So,
guy.
sir, you are a very inspiring human being.
Yeah, thank you
Trust
so
me,
much.
you're
Thank
one
you
of the
so much.
most inspiring human beings. I
Thank
really admire you a lot.
no, thank you very much. Thank you
Yeah.
so much.
Thank you.
Uh,
Thank you. It's an honor talking to you, sir.
No, no,
Bye.
not only,
Good
please.
night.
yeah.
Thank you.
Karan, you can go ahead now. Karan, you can go ahead. Karan, you can ask your questions. Karan Shet. Okay. I'll take it from Anubhav then. Anubhav, you can ask your questions.
Yeah, hi, Samir. So,
Yes.
to be honest, I really wanted to know about the mutual fund thing, but I guess that has already been asked. And
So mutual fund, we are hoping to actually have a launch in September or October. So we are hoping approval well before that, but we don't know exactly. But we believe it's coming sometime now because we have finished our side, but we don't know.
have you decided on the kind of funds that you're going to launch? Is it going to
Yeah,
be
yeah.
active, passive, or what
No, we
exactly?
will not do passive,
Okay,
and we will not do tens of funds, but we will also not do one fund. But over 1 to 2 years, we might do 4, 5 funds. That's it, and we will not do debt also.
okay. Uh, uh,
Basically, our history, we are fund managers first and business guys later. So we are not interested in doing anything and everything because we have the license. So we will do what we have done for 20 odd years. So we will do only equity and not many, but maybe five. And one more thing is there that we might do this balance one day. For that, we have some debt in it, but not pure debt ones. We want.
okay. And there are new regulations that are in the pipeline as such. Is it going to be good for you, or are these things
We don't
going to
know.
be negative?
These we don't know because these regulations are still a discussion paper. So basically, we also believe that expense ratio is okay, but brokerage should not be counted because when you are hiring a fund manager, it is not to substitute your brokerage. You can say that don't pay so much to any broker, all that is okay. But STT is such a big cost. What can anybody do about these things? Let's see what they come up with.
Right.
Gautam,
We are not even a part of the discussion because we are not yet mutual fund company. So the whatever 42 guys will decide, and mostly we can't do anything. But that is my point that it should be like, but who am I now? If these guys have to negotiate with the regulator.
Gautam, do you have any questions? You can go ahead.
Yeah, hi. Good evening, Samirji. I'm also from
Anji.
Singapore. So maybe, if
Okay.
possible, like
if you meet, you have a seminar or something, I'm open to meet you if
Acha.
you have
No,
such
we don't
plans.
do any seminars here because here we are institutional. In India, we are retail.
Okay.
But we can meet sometime. Acha, anyway, if you have any questions, you ask. Otherwise, we'll meet sometime. That's no
Sure,
problem. But we won't do
sure.
seminars here.
Yeah, so I have a very quick question on the ESG policy. I see that because of some ESG policy, the manufacturing sector is definitely has lots of roadblocks, and I see that Tata and all the folks are like up against. I mean, they are from policy perspective, they are much ahead in the game. Do you see that the manufacturing sector will no more be a cyclic sector for next 5-10 years? I see you, if you
That
see the
could be.
data and all. Yeah. Okay.
That could be in the beginning, and for some years it could be primarily, according to me, driven by this China plus one only, where so many companies or supply guys might want. I mean, supply chain might be diversified, and that will help. And also, the Indian government is at least helping in a few sectors with this PLI scheme, or even previously the Make in India duties. So, in some sense, yes, but beyond a point, from a listed market point of view, we don't find so many things because many of these will be done by MNCs privately or their their ecosystem coming here. So when Apple makes phones here in India, they might bring in Foxconn and they might bring in their whatever other guys, but what will we get out of it other than India being helped? I'm talking from a stock market point. But India help is indirectly helpful to us if jobs are created and that. But I'm saying just to directly buy a play, we will not have that many choices according to me. Just like in China,
So
many of these you could not buy, right? All these guys who have set up chains there, their or supply systems there, you had to basically buy the US parent if you thought that this part was big. But I think some of that will also happen in India because new companies don't have to be listed. This is the crop that we have of the MNC listing is the crop that was forced to list in 70s and 80s or whatever, whenever.
We'll take another
so
three.
ESG is
Gautam,
ESG. Yeah.
ESG,
Okay.
ESG, ESG is a fund manager driven thing, mostly the
Uh,
Europeans. And I knew that this will fail the day the non ESG companies start doing well. I mean, it was so obvious that for 2, 3, 4 years, it was easy to act holier than thou by saying, I don't buy coal, I don't buy oil, because separately, the coal company and the oil company were underperforming the market. In the first year or second year, or actually first year, as soon as those companies started outperforming, everything collapsed because who will accept that I will not buy coal because the coal guy will say, hello, your transition to alternative will take 20 years. What will you do in between? India will say, I am poor. Adani will say, I don't have money. How will it work? But when these stocks were doing badly, it was very easy to signal that we don't do this and we don't do that and we don't. Now everything is gone. So I actually made a presentation on this, saying that if a business is financially good, but society-wise confusing, let's say gaming, let's say any bad business, who should buy it? Only good guys should buy it. Because if the business is financially good, I'm not saying the business should not be bad, but the business should be good, but it has some these big picture externalities and harmful effect. If bad guys buy those businesses, and the bad guys will become financially stronger. So actually, good guys should buy these businesses and take the profits and then do whatever good things you want to do it with. Instead of saying, I will not buy it, let the other guy buy this casino, this gambling, this meat eating, then those guys become stronger. That was my humorous way of saying it. But the point is, this would cannot work when there is a conflict with returns.
Samir, if
Thank you.
time permits, I'll take another 4, 5 questions.
Okay, just take whatever till
Okay,
12. Let's do it. Okay,
okay,
11
okay,
minutes. Yeah.
okay. So,
But may I just say one thing on this ESG, that some things have become part of natural, that your governance should be good, that, broaden the board, make sure that, there are rules for more hiring of women and things like that. So, वो तो ठीक है, that is normal as you evolve. But to say that I will not do this and I will not do that, I think that is the thing which is under threat. And that's why if you see in the US, people are fighting with Blackstone, with BlackRock, because BlackRock is a big fund manager and they were voting on behalf of all these. And they say your policies are woke policies. And this fellow who's running for president, who's got only 1% approval, one Indian fellow, he's fighting only on this point. What's his name? The guy who's running for US primary, this thing from Republican, that Indian guy, Indian origin guy,
forget the name of.
Venkat or whatever his name is.
Yeah.
Vivek, पता नहीं क्या नाम है
Yeah.
इसका। हाँ जी।
Okay, so I'll go next with Arush and then Rishabh and then Nitesh and then Anirvan. These 4 questions we'll take in the sequence. Arush, you
Yeah,
come in
then go.
first, and then probably Rishabh and then Nitesh and then Anirvan. Yeah.
Sure. Thank you. Thank you so much, Tanmay. Hi, Mr. Arora.
हाँ
So,
जी।
I'm Arush and I'm from Team TradeX, which is an easy to use trading platform where you can start your journey with zero brokerage and 500 and up to 500 times margin. So, my question would be, what exactly is the scope for EV in India? Uh, how much should we be investing in it, seeing the future and the increasing popularity of this segment?
So according to me, you should not be investing. I have not invested, and my logic was that if you see the capex of all these 10, 20 multinational or whatever fellows, and the scale is so big that how do you know today that whose EV will be properly successful? Because if our fellows spend, like, I think I remember reading it, M&M did some deal with some private equity guy and that guy gave him 200 million, and the EV budgets of these global guys are 125 billion. If you type Volkswagen, I think it's more than 100 billion. So we don't know whose EV will be successful, and whoever EV will be successful after 3 4 years, 2 years, whenever they are successful, plus minus a few years, they can land up in India also. What's the big deal? So,
Right.
because the game is so capital intensive,
Mm-hmm.
and
Right.
you are not, so just because one fellow launches, our stock goes up. What I do, I may be short term, but I'm not that short term, and I don't punt. So I don't agree with this whole thing. But I bought Tesla, which I never bought in my life, because I saw his interview with CNBC like I think 2 3 weeks ago, and
Mm-hmm.
Elon Musk said that if you are thinking that AI is doing well, we are the biggest AI firm, because we think that one day, which he's been saying forever, that our cars will be driverless. And he said, and that's why I bought the stock in my other fund, global fund we bought, not me, but whatever we made them buy, is that if you ask Google and Microsoft to make a driverless car and use AI, and you ask Tesla to make Chat GPT, what do you think is easier? I understood that line, that this is an AI play. But I'm just saying that this EV I don't relate to it, because I don't believe that the Indian guys are ex ante
Right. Sure.
playing that game with that size of investment. And who knows, maybe theirs is successful.
Mm-hmm.
But big
Right.
picture, it looks difficult. But who knows?
Absolutely. Thank you. Thank you so much, sir.
Thanks.
Rishabh, you coming?
Yeah. Thank you. Hi, Samir. I
Hanji.
have actually 2 questions. The first one is regarding the valuations and the multiples in the Indian markets right now. So I started investing when I was in class 9. At that time, only like Colgates and the other MNCs and Nestle's would command a valuation of say 30, 40.
Correct.
Nowadays, every other company,
Everybody,
everybody is
50.
40, 50 multiples are like normal. So nowadays, I don't even
Correct.
look
Yeah,
at
yeah, yeah.
multiples while investing. So you as a fund
Acha.
manager, how do like I do look at the multiples, but
So
they're
what we
so
do is,
normal.
yeah, they're fucking wild peas here. So what we do is we say that if you have these 40-50 type P,
Yeah, yeah.
then you cannot be growing at these 10-15%, which is the regular growth of these bigger companies. Like Nestle must be growing, I think, 12-14% in life. If you see last 10 years, I think it will not even have grown at that rate. So we will not pay. But if you are because you are slightly new or relatively smaller company and you are growing at least 20% plus, mostly some of these for us grow at 30% plus, then we also say ki, chalo, we'll pay these 40-50 times. But I totally agree with you that this absolute buying the same 10-15 stocks, and main thing is that I because mostly the funds, even if they buy it, it is some 3-5% of their fund, or 7-8%, and individuals don't even know the returns that they of the stocks that they own. For example, so many guys tell me, not now, but they used to tell me that we own levers because my dad bought it, and the dividend we get from levers today is higher than the price that we paid in 1980s. Who cares? I mean, these are stories. What does it mean that because you get higher dividend? The reality is, 25 years ago, if you had bought the index, you would have made maybe 5 times more what levers has given with
So I
dividend.
have a
But per se, the dividend is more than it has no value other than ridiculous storytelling. So the point is that if some of these stocks, for example, even this fellow who's bloody cheating and selling off businesses, next day I tweeted also. Next day somebody wants to buy it because it's corrected 3%. I mean, who was this fellow who one day before was not willing to buy the stock, and then he saw a corporate governance issue and the stock corrected 3-4%. He said, today's my opportunity. What the hell? This is too much of brainwash, this thing, and that is why,
no. So I have a
you know,
counter argument to this.
Haji,
I'm just like for
Haji.
theoretical sake, like
Yeah, yeah,
you have
yeah,
like
yeah,
once I read or listened to you on an interview saying that you have an investment in campus activewear. So
yeah, yeah,
let's
yeah.
take Nestle and campus activewear. Now,
Ha,
Nestle
ha,
today
ha.
might be growing at say 10-12%, and campus, let's
Ha,
say, starts growing or is, I don't know, at 20-25% it grows. But
ha.
Nestle being in an industry which, it's less competitive, whereas campus, a new competitor might emerge 3-4 years down the line. So don't you think then the P?
No, no, I agree. I agree. So the thing is, this is why, why people lost money in Madoff and they didn't lose that much money in hedge funds is because in Madoff, fellow was giving 8% guaranteed return. So you gave 100% of your money to that fellow. In no other fund where even the stocks are down or up 20%, does anybody give 50-80% of their portfolio to one fund. So it's the same thing. Here we understand that we are betting on a new name on the basis that in China and all, the guys who are trying to compete with the Nike and Adidas at whatever, one third, one fourth the price can become and have become very big.
Okay.
But you are buying 2%.
And just last question.
And it worked for, sorry. So what I'm trying to say is you have to position it like that we are playing this because we believe that when we buy 20 companies,
Yeah.
we don't exactly know which fellow will succeed, but broadly we know that in any case, even if you do no work, according to our big picture formula, 30% of the stocks do very well relative to the index and 30% do very badly. That means if I buy 20 stocks, anyway, 6 stocks are supposed to do well, means significantly well, and 6 are supposed to do badly. So when I do my research, I am hoping that instead of 6 good, I get 8 good or 9 good. Or instead of 6 bad stocks, I land up with 2 bad stocks and I will outperform the market by 4-5%,
Yeah.
which is what normally. So it is not a campus versus Nestle story because uh, in the last 6 months, maybe it was because they did something bloody before their IPO, who knows, that the growth was ramped up. But the market has slowed down, or they have slowed down, or whatever. So the growth has not been that. Otherwise, they would have again outperformed this stock by a big number. But these are different buckets for different things.
Okay, so
But big picture, if I buy five stocks
mhm.
from this theory,
Yeah, yeah,
nearly guaranteed that those five stocks aggregate return will be better than your Nestle.
yeah, yeah. So that
But you don't know any one could do badly also or not do as well.
so what do you make of like Jamie Dimon? He came up with this. He's trying to come up with a chat GPT for like investment advice, right? So what do you make of that?
I don't know because all I know is that I don't do velagiri. For me, it is that what is the actionable thing. And for me, the actionable thing is not that I start using Chat GPT for like Helios Capital, but that all these chat and the other variations of this will, according to me, impact 20-30% of Indian IT jobs. IBM has deferred its this thing of I think 5,000 ki 500, I think 5,000 jobs as they say we evaluate, and there'll be so much confusion that is of interest to me. But because we are not like many people say, how will AI affect our business? It will affect business, but I don't think it'll affect me in the sense I cannot change now and suddenly go from extreme bottom up to using AI for my stock selection. I will not be able to do unless somebody, few years down, we have some fellows who we hire along the way and who convince us to include that in the. We will do it our way only. Yeah.
So like I was listening to you in the recent interviews, asking the anchors how Sting tastes like.
Yeah. How do you think?
I sold Varun beverages after having a bottle of Sting. So I think that is one
By the
that
way,
is one big
I I
mistake.
have I have not had the guts to have it,
I think your
but it's
outperformance.
I've not even had Red Bull in my life, so I've not had Red Bull
I think
also.
your
So it's a
outperformance lies.
poor man's Red
Yeah,
Bull.
I think the outperformance Varun beverages is given you is because you didn't have Sting itself.
So people say try the
Yeah,
products.
you shouldn't. I think in some cases.
People,
Rishabh, great
Yeah,
conversations. We'll have to
yeah.
take others
Pleasure talking to you,
okay,
because,
Samir.
let's do the last question. Yeah, it's whatever.
yeah,
What's the time? Yeah,
yeah. So,
midnight.
Anirban coming, the last question.
Yeah.
Shashank.
Hello, everybody. Hi, Saman sir. Last time I got a chance to speak with you on other week. Thanks for that. Now I want to know on mutual fund how you manage the downside. Like now, market is all-time high. Everything looks very colorful. But mutual fund, as per
So in
regulation,
a
like
mutual fund, you can't manage the downside. In our hedge fund, we try to manage, but that also is difficult to, change the net a lot. But in a mutual fund, you cannot do much. Maybe 3, 4, 5% cash you can take, or once in a while, if you really can figure out that the market is bad, you could move from mid capish to large capish, at least in the flexi cap kind of a thing. But beyond that, you can't. So our big picture, according to me, is that over time, market does well. Therefore, if you can just say that I will beat the market very regularly, that is massive value add because the market itself actually also gives good returns. Therefore, I don't believe in the thing that how can a fund manager be feeling happy that he has lost money for investors because if the market is down 10 and he was down 7, suppose, or 5, then why was he smiling? According to me, that is massively useful in compounding because even the minus 10% wala index over any longer period has done reasonably well compared to other asset classes. So, therefore, if you can outperform it in good and bad times and little more here or little less there, but broadly outperform, that is the thing you can do, and that is enough. When anybody tries for absolute kind of return, then 80-90% of the time they end up underperforming the market over time. You can see it simply. You can type and see the US hedge fund index and just see its performance over a longer period against the S&P 500 or even this year. This year the US market is up I think 10-11% and the hedge fund index is up 3%. Because if you overly try to protect in a bad time, you will not be able to participate in the good. So we say we will try and beat the index, not necessarily protect an absolute, because
Yeah,
it's nearly impossible.
that's very insightful. And
Uh,
I
Ani-
wonder if
yeah, Anirban, no last question. Samir is already out of time. Shashank, quickly you
yeah,
can
I
ask
can
your question, then we'll done for the
Yeah,
day.
perfect.
yeah, I
Thank you
just
so
want
much.
to know.
Samir sir, just have a quick question,
Haji,
sir.
Haji.
Since you run a long short, portfolio, and I was actually listening to Irani sir once. He was mentioning that on the short side, the Indian market specifically has a very like has a reputation of going like falling very quickly.
Very last 1 or 2 years it hasn't because of the but normal, yeah, overall
Oh,
absolutely.
so
Therefore,
therefore, I wanted to understand, like let's say, for example, a retail investor managing his money, how can we incorporate and benefit from the short side of
you
it?
should
We
not.
should not.
No, you should not. You should not.
Oh,
We do it
hmm.
basically because we are investing from outside India and our tax rates are zero.
Oh,
So when you are in India,
right.
your tax rate is 39%, and you can't add so much value, that you can overcome the 39% that you will end up paying. So for you, it's better to just put a lower allocation, maybe 10% lower, and use that 10% in some sense in bad times to step up. But for you to short all the time, like we are shorting 30% all the
Hmm.
time, but that is because of TAX not being a problem.
Okay. And
So that is the advantage to the FII.
right. And what percentage, like for example, the return that the alpha that is generated, how would you, let's say, like इसको split कैसे करोगे sir, from the long and from the short?
So so what our thing has been since 2010, because we have from 2010 a long only that we can compare with. Our long short with about 60 net
Hmm.
has beaten our long only by about 1% per annum. But literally in every other model, the long short would have got 60% of the return, well, broadly speaking, because you are 60 net. So you're, in a sense, the normal default will be, okay, you're making 60% of the returns because you are at different risk return curve. But we have beaten the long only, our own long only,
Hmm.
by about only 1% per annum. Now, somebody can say that 1% per annum के लिए इतनी मेहनत की.
Yeah.
No, ये नहीं है ना. Because in that period, suppose the world had blown up or it had been like eight, or in general, it's like saying that I paid for insurance and I recovered it from something else. You are not supposed to want the house to burn down because you bought insurance. So we had 35% insurance nearly all our life,
Hmm.
not all our life since 2010. And we not only did pay for it, we earned a little bit from it. Because in this period, the market itself was up in rupee terms some 3-4 times or whatever it was up. So when a market is up 3-4 times, in theory, the long short fund has to underperform the index also.
Hmm.
And here we outperformed our own long only. So हम इस हिसाब से we are happy. But in absolute, somebody from outside view, big picture view can say, what is the use?
Right.
The use is when you buy insurance,
Hmm.
the use is that if something goes wrong,
Right.
if something doesn't go wrong, you can't say, what the hell did you buy
We,
insurance?
we,
So that's the
we
way to
become the
look at it in
Jesse
our point.
Livermores of 1929.
नहीं,
If
Jesse Liver more का yeah, if something went bad,
yeah,
correct,
something like
correct,
that.
correct. No, yeah, we won't become that much because we are very rarely going to be like 100 short.
Right. Right.
हमारा model इतना wild नहीं है ना, because it's a
Correct. Correct.
institutional model and not a personal model.
रिश्तेदार बन जाएंगे उसके.
हाँ, थोड़े बहुत भी बन जाए नहीं, बाकियों को आउट सिंपल लाइफ है. You have to outperform others.
Correct.
बाकी तो क्या है?
Correct. No, that's a very valid point. Sir, just a small little question on the additional side on the Indian markets. So when you see the the small micro cap space, specifically when the country's GDP is progressing. So how do you is there any suggestion that you would offer to the retail investor that how to
No.
approach this
So
zone?
or is it even worth it?
No,
Yeah.
we are not. I don't think it's worth it. But may I explain
Sure,
one
sure.
thing? That यार GDP के चक्करों में ना पड़ना.
Hmm.
Because for the last 25 years, that is from 1998 to 2023, maybe some small market ka nahi pata, but among the bigger markets, India has been number one. That is including US, China, Asia, Japan, Europe, emerging market. Now, for 15 years, US is number one. For 10 years, US is number one. For 5 years, US is number one. And India, in all three, has been number two against these pools, which is Asia, Japan, emerging market, Japan, China. Okay.
Right.
But कहने का मतलब है कि लास्ट 25 सालों में इंडिया हैज बीन एक्चुअली नंबर वन.
Hmm.
It has beaten the index has beaten Warren Buffett in dollar terms.
Right.
तो ये स्टोरीज भी अच्छी हैं कि हमारी जीडीपी से कुछ नहीं होने वाला.
Hmm.
This all happened, according to me, because we did not do reform. Because if all these PSUs had been listed, BSNL, MTNL, Air India, Doordarshan, all of them would have been down 95%.
Right.
My index would have been down. Our index is not down because we didn't have those sectors listed in our market.
But
कहने का मतलब है कि the market is on its own. If you do, let us say you do a lot of reforms and one stock earnings go from 1 to 10 in 1 year, and then they are flat for the next 5 years at 10, 10, 10. And then the other model is that there are slow reforms. So the same company, first year is one, then next year is two and a half, then it is four, then it is five, then it is eight, and then it goes to 10. So cumulatively, the second company has made much less money than the first company because the first company immediately went from 1 to 10 and then made 10 for 5 years.
right. So,
आपके हिसाब से 2 साल के बाद मल्टीपल किसका हायर होगा?
hmm. I see.
जो 1 से 2, 2 से 4 कहेंगे जी स्टडी कंपाउंडर आ गया, इसको 70 मल्टीपल दे दो. पहली कंपनी को कहोगे ये तो साला ब्लडी ग्रो नहीं करता आफ्टर 1 ईयर, तो 10 के ऊपर 3-4 का मल्टीपल दे दो, ये तो ग्रो ही नहीं कर रहा,
Right. Right. So
6 का
so sir,
मल्टीपल दे दो.
idea like
तो द पॉइंट इज इंडिया बेनिफिटेड फ्रॉम इट्स स्लो एंड स्टडी so that people could see visibility.
hmm.
आप जितना जल्दी करोगे वो लोग हाइपर कंफ्यूज हो जाते हैं, बल्कि मेरे हिसाब से.
So sir, like if let's say the idea of divorcing the GDP from the market, so can we then can conclude that the India may like the businesses that are going to be run are going to be more entrepreneur driven, and inherently this place would remain as a stock pickers market, like business model and
No, 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 वो तो है ही. But the thing is, India can benefit from these macro themes. Macro theme means people putting more money into India because they like India top down.
oh
That is why this China plus one, demographic beneficiary, geopolitical beneficiary. उसके बाद स्टॉक तो यही वाले लेने पड़ेंगे. आप जो मर्जी कर लो, एंड में तो आपको बैंक कोई लोगे, कुछ टेक लोगे, कुछ कंज्यूमर लोगे, लेकिन वो आने से पहले की जो स्टोरी है,
right.
that story is based on macro top down kind of thing. उसके बाद स्टॉक सिलेक्शन नहीं है. बट आई थिंक जीडीपी से नहीं कनेक्ट होगा.
Fund inflow से होगा basically.
जीडीपी से नहीं कनेक्ट होगा. नहीं 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 नहीं, आई एम सेइंग वो स्टॉक से होगा, बट जीडीपी पर से नॉट अ गुड दिस थिंग. जीडीपी यू कैन से, ओके, इन वन सेंस यू कैन से कि भाई जीडीपी इज द कॉर्पोरेट अर्निंग्स.
Right.
Not corporate, sorry. GDP also has corporate earnings as one of them. So if I look at it like that, you can say कि services are पता नहीं कितने 50-60% and agri some 20, and वो कौन सा जो भी गवर्नमेंट स्पेंडिंग है. सो कॉर्पोरेट जो बैकड्रॉप है वो 12-13% ग्रो हो रहा है. तो दैट मच इज देयर. You can say another way also कि when per capita income goes to this much, then they save more. तो वो सब चीजें ठीक है. I'm not saying कि absolutely not, but उसके लिए स्मॉल कैप लोगे कि लार्ज कैप लोगे, इस चीजों के लिए नहीं लोगे. Although in theory, you can say we bought campus thinking that there'll be a middle class, aspiration class, which doesn't want to pay 3,000 for a Nike or a Adidas shoe, wants to pay 700, doesn't want to exercise, wants to go to mall, but wants to wear these sneakers. Who knows? So this is driven, in one sense, it's being driven by GDP, but we call it driven by demographics
Mm,
and aspiration
right.
of who knows.
I think
So
the
you figure
the
it out. But
component of the GDP, which is contributing to the market, could also be possible that it's not even listed. Some
that is one
yeah,
part. But yeah. And some of the new things may not be listed,
correct.
like these
Yeah.
China plus one plays, like this Apple type thing. But then we will say that Apple will give 20 to 30,000 rupee jobs to so many workers, so many women, which will be maybe second income. So उससे suddenly spending बढ़ सकती है, ये सब चीजें भी हो सकती है. But I think beyond a point, very difficult to link
Yes.
literally.
Thank you so much, sir.
Who knows?
Thank you, sir.
Chalo ji, let's go now. It's 12:15. Good
Yeah,
night,
Samir.
guys.
Thanks very much. I probably was gonna
Okay,
ask
thank
you
you.
some of the books name, but no, you are in a hurry because already
Book
8:15
name, so
p.m.
you see on Twitter. Today also I tweeted one book.
Yeah, but anyways,
Okay.
thanks a lot, Samir. It's a great
Okay,
pleasure
thank
to
you very
host
much,
you.
guys.
Yeah,
Thank
thanks,
you
Samir.
so much,
Thank
sir.
you.
Yeah,
Thank you
And
so
those
much.
and for those who joined late, the session is recorded and very soon it will be placed on YouTube so that you can revisit at any point in time. Thank you, Samir, sir.
thank you,
Okay,
sir.
thanks, G. Bye.
Thanks a lot. Bye bye. Thanks.